Houston, we have no taxes. SpaceX may be one of the most remarkable examples of how billion-dollar companies can legally pay little or even nothing in federal income taxes. According to a recent New York Times report, SpaceX has told investors that because of a tax law change passed in 2017, the company may never have to pay federal income tax. Here's how it works. When a business earns a profit, it owes tax. But when a business loses money, the IRS does not issue refunds. Instead, the tax code allows those losses to be carried forward to offset future income. This is known as a net operating loss, or NOL. Before 2017, companies could only carry forward these losses for 20 years. The Tax Cuts and Jobs Act removed that limit. Now losses can be carried forward indefinitely. This is where SpaceX gains its advantage. The company was founded in 2002 and expects to generate about $15.5 billion in revenue this year. While it reports positive cash flow, the company has accumulated roughly $5.4 billion in losses. Those losses can offset taxable income for many years to come. To some people, this might sound questionable, but SpaceX is following the tax code exactly as written. There is nothing illegal about it. The irony makes the story even more fascinating. SpaceX would not exist without government support. In 2020, the company earned about $1.4 billion from federal contracts. In 2021, that number rose to $1.7 billion. Today, SpaceX still benefits from hundreds of millions in government funding for projects like delivering cargo to the International Space Station and launching spy satellites. So yes, the company earns billions and receives major government contracts, but under the current tax rules, it may never pay federal income tax on those profits. Should the rules change? Some believe Congress should bring back the 20-year limit on carrying forward losses. Others suggest placing a cap on the total amount of losses companies can use. For now, SpaceX is simply playing by the rules. The tax code was written by Washington, and the company is using those rules to its advantage. This story highlights a broader point. Business owners and investors do not need to run billion-dollar companies to benefit from similar strategies. With the right planning, the tax code offers opportunities that most people never use. David Tuck, ex-IRS auditor turned tax strategist, breaks down stories like these and shares how the rules really work and how business owners and real estate investors can use them to plan smarter and keep more of what they earn. Subscribe to learn more.